All right, joining us right here on ET now is a Davos veteran, Vice Chairman and Managing Director of Kotak Mahindra Bank. Thanks very much for being with us, Mr. Kotak. And like I introduced you, you are a Davos veteran. How do you map the world right now, the world that we're living in?
I think the world's in a very interesting place. We're going to see a new US president. We saw the Chinese president for the first time here in Davos and making a highly impactful speech. The world order seems to be changing. And we are witnessing some of that with China trying to take a much bigger position on the global stage.
I'll come to the two factors that you spoke about in just a bit, but what do you think will be the biggest driving factors both for global markets and for global economy in 2017?
I think, first of all, it is Trump. And Trump's focus is domestic America, which will mean significant focus on American growth, but with it comes the risk of protectionism, protecting jobs in America, and probably against global trade. And America is a big consumer from the rest of the world, so we got to watch out how the Trump presidency plays out in reality.
I'm glad you're being candid to say that the Trump presidency has created a lot of speculation around the world. It has caused concerns in some of the world, some part of speculation. With just a couple of days to go before he actually takes the Oval Office, what sort of a transition do you see the world witness? And more importantly, what impact will it have on global economy and on emerging markets like India?
So, America obviously will show a higher growth if they really get their domestic engine working. But you got to keep in mind the dollar is extremely strong, which is the counter to this. So one has to see how the currency game also gets played. You're seeing both UK and Europe beginning to gain now from a weaker currency.
Right.
So you will see a combination of effectively some sort of currency wars with trade protectionism as the new challenges in the world.
Will the dollar continue to be as strong as it has been?
I think this is like asking me a question on roulette. So this is like a daily moving thing, but you have to see how protectionism and currency between dollar, euro, Japanese yen, and every other, and Chinese renminbi play out in the global stage.
Where does India stand amidst this all? If his first press conference is anything to go by, then should Indian IT companies and pharma companies that have exposure in the market like US be worried? Should there be causes of concern there?
I think India domestically is in a good place. Our macro numbers are in very good shape. Therefore, whether it's our current account, whether it's our inflation number, I think the government is doing a good job controlling fiscal deficit, at least for 16-17, to the 3.5% level, as I understand. And as long as global commodity cycle does not get out of control and oil is broadly in the $50 to $60 mark, India is okay. And what India really needs to focus on is building domestic savings even further. I do see the risks of global financial savings going back home, particularly America. If that happens, India, as it has been seeing for the last few months, some reverse outflow. And India should be ready to accept some reverse outflow on account of our portfolio monies in particular.
And you believe the trend will continue in calendar year 2017?
We have to be prepared for it. If it does not, that's good news. But let us not hope and plan.
Can't be sanguine about this. We're also seeing some early signs of global recovery, the ones that you alluded to. The US economy will pick up. Perhaps UK is looking a little better than most people had anticipated post-Brexit. Is this for real? The whole global growth that we're referring to, the pickup?
Yeah, I think this is still early days. To a certain extent, growth is also helped by commodity cycle getting better. So that's also helping a little bit of the spirits. And the commodity cycle is getting better because people are not expecting China to do as badly. However, the Chinese situation, one has to watch towards the end of this year, because the view one is getting from China is that they will hold on to their growth at least till the domestic within the party elections happen, which happen end of 2017.
So China will continue to be that uncertain mystery that nobody will get to know of till the end of this year.
That's what one hears from the experts on China.
Will 2017 witness a massive shift in asset allocations, you think?
From where to where?
from India to developed markets, from emerging markets to developed markets. You've alluded to that, yes, but I'm just saying, is 2017 going to be the year to...
I think you really need to watch the unknown, which is the Trump presidency. And the world is speculating how that really goes. So no point making an early assumption on how Trump presidency will go.
So you don't think that what we are getting to see of Trump right now may be his policy in the Oval Office?
We just need to wait for the next few weeks and months.
What do we say about the US Fed rates? If economic recovery or the pace of economic recovery is anything to go by, should we be expecting aggressive rate hikes?
I think most experts expect 2 rate hikes in 2017. The hawks expect 3. So it's either 2 or 3. But on the base case of 2 rate hikes, my sense of the US 10-year is around 2.8 to 3%. And I think the market is ready for a pricing of around that, at least 2.75, 2.8 in its calculations.
And anything beyond that could perhaps be disruptive.
So that's what we have to watch.
So let's shift focus to India. I mean, just yesterday, the IMF did cut India's growth forecast from 7.6 to 6.6%, largely on the back of demonetization. A lot of people believe that growth may actually be at levels lower than that. What's your own assessment?
My sense, first of all, and I'm talking from the ground, I'm beginning to see in India early sense of normalcy coming back. So it's not looking anywhere near as pessimistic as people were talking about in November and December. Having said that, one needs to watch closely how demand picks up. There has been some impact on the informal sector, but the formal sector is actually going to be a big beneficiary out of the demonetization.
I'm glad you've been candid to say that it's not as pessimistic as it was being thought about in November and December. But the question also is that the debate around demonetization needs to be put to rest. Till when do you see the scars last?
No, my personal view...
And you're saying early signs of normalcy are returning.
Yeah, I think normalcy is looking like it's coming back. Combine that with the fact that if this leads to culture change, then it's a big thing, where Indians start paying taxes honestly, and if there is a behavior change, I think it's a long-term benefit for increasing the tax to GDP ratio of the country. Therefore, I am actually hoping a significant culture change amongst Indians out of this to happen.
So the 2% tax to GDP ratio needs to go up, and you've been talking about this for a while now. As a banker, I'm going to ask you a question on your regulator, and I'm going to take the liberty to ask you that question. What about the role of the RBI in this whole process? You have RBI unions talk about infringement upon the autonomy and the independence. Do you see something similar happening?
You know, it is not appropriate for
a banker
to speak about the regulator. We respect our regulator and we follow regulation.
So you're not going to comment on the credibility of the RBI that many people believe has taken a hit?
No, I think my view is we are believers in law, and RBI working within the framework of law is what we will always follow.
You know, Mr. Kotak, people talked about how banks are going to be flush with funds. The problem is that banks are saddled with funds right now, and there is no credit offtake. How do you actually see the significant asset liability mismatch? And where do things pan out from here? Because interest needs to be paid on the deposits that have come in, and credit offtake is.
I think banks will figure it out, and I think we believe that this has led to lower cost of funds. Most banks, including us, have dropped our lending rates. So I think this helps ultimately get to normalization and growth pretty soon.
So demonetization has paved the way for lower interest rates. When do you see all of that actually help in reviving sectors like real estate or auto that has taken a big hit, both in November and December?
I think the two sectors which will take some time to recover are real estate and the jewelry sector, because they were also very closely connected with the cash economy.
That's right.
Therefore, other than these two, I think in most other sectors, we should see recovery happening between this quarter and next.
And what about the scope of a further rate cut by the RBI? I mean, the central bank did choose to stay put in the last policy, but there is a growing clamor.
I think the current inflation numbers give them room for a rate cut in February.
So the budget is right around the corner, and I can't let you go without asking you questions on that. This is going to be happening in the backdrop of demonetization. How disruptive do you expect this budget to be?
I think this budget is going to be a positive. We're going to see significant support for the SME sector, for business in general, and I genuinely believe that this is an opportunity for the government to give a feel-good sector, feel-good to the commercial and the business sector of India.
The RBI governor has cautioned against excessive borrowing because he believes that can inflate or in fact, widen the fiscal deficit. Do you believe the need of the hour is fiscal prudence, or should government put that at bay and go for, I'm going to say populism, but go for fiscal spending?
No, my view is we hopefully achieve 3.5% for March 17. I would be comfortable if for March 18 we are, instead of 3, which is what the target was,
that's right,
we do 3.2 or 3.3. It's not the end of the world.
So you're not somebody who's obsessing on the last decimal point. The Prime Minister just a few weeks back did say and made a case for higher taxes or contribution coming from financial markets. I'm not going to ask you whether that issue has been put to rest, but is there a case for this?
No, I think at this point of time, we really need to see the financial intermediation business gain momentum. Therefore, the formal sector has to be out there lending money, building Indian economy and the business. And I'm sure that the government will take steps keeping this in mind. And we do hope that a medium to long-term view is taken in the context of building the Indian economy through a strong domestic financial sector.
So 2 quick last questions then, because I'm just going to take cue from what you just said. The finance minister has clarified that the long-term capital gains tax is not coming, but the markets have this overhang, have this fear that it perhaps will and it will be reintroduced. What about the short-term capital gains tax? Could that be hiked?
Wait for a couple of weeks and you will get all the answers. And if there's one thing this government has been very good at, it's keeping secrets.
And keep people guessing. So I'll ask you one last question. The budget is right on the corner. The finance minister who watches a lot of ET now, I can tell you. What is that one suggestion that you will tell the government or give the government when it goes on to what is perhaps going to be a transformational budget for India?
No, I am a big believer that India needs a big boost to jobs. And jobs happen through business. And therefore businesses which can create jobs must get significant encouragement from the government. And I would strongly hope, for the sake of all of us Indians, we are out there creating as many jobs as we can.
And that is going to be the key to changing everything. Thanks very
much. Thank you very much. Thank you. Thank you.
Mr. Uday Kotak, right here on ET Now Davos Direct. Thank you very much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.